looks good. All right, we're good to go. Okay, so obviously, welcome everyone. This is an introduction to ICT trading. For those that you that don't know, ICT is he's known as his group is called known as Inner Circle Trading. He invented basically, well, he claims he invented the speculation about where they come from and the fact that they're based on all sorts of different concepts that were built up over the years, all sorts of different things. But you know, we're not here to talk about that. It's whatever you believe in, right? At the end of the day. But it's essentially a new way of looking at the markets, right? So the typical ways are support, resistance, trend lines, that sort of thing. It's a new perspective on the market, which in my opinion is very, very accurate and it works really well. So let's go ahead and dive into it. Now, the first thing to consider when using ICT concepts is liquidity is everything, right? From an ICT trader's point, on the markets, liquidity is everything, right? Liquidity is what drives the markets, okay? So we say in the ICT world, retail traders, quote unquote, right, place their stop losses and limit orders at obvious levels like swing highs and swing lows, right? And institutions target these zones to trigger what's called a stop hunt or a liquidity grab, right? And then price moves the other way. Now, to actually explain the logic going in behind that and why that sort of works is, let's say there's an institution, right? And they have 1 million orders that need filling, right? There isn't enough buyers to sellers to fill all those orders straight away, right? So the market need to push the price up to a certain level where they can then get price filled. So there has to be an equal buyer for an equal seller, essentially, okay? So that's how that concept sort of works. Now the market from this POV works in 3 ways. It's either running for liquidity, right? Or it's either running to fill an imbalance in the market. And what an imbalance in the market is an imbalance between buyers and sellers. And I'll get to that in a moment, okay? Now, there's 3 types of liquidity. There's buy-side liquidity and sell-side liquidity. So that's just swing highs, swing lows. So a buy side would be a swing high and sell side would be a swing low. There's also what we call trend line liquidity, all right? Trend line liquidity is, sorry if you're a trend line trader, I'm low-key gonna, kind of go against you here, so to speak. But trend line liquidity, right, is you see all these wicks on this trend line, okay? All this is build up of orders. This is all liquidity, okay? And this liquidity needs to get taken out. So look at all these wicks. Above every single one of these wicks on this trend line is orders, okay? So the market is naturally going to want to gravitate to take out all of these orders. So that's what we mean by liquidity, okay? Liquidity, put it in a literal standpoint. If I come onto a chart, right, and I just go here, above this high are orders, okay? The stop losses, there's limit orders above there. Above this high, there's limit orders, the stop losses above there. Does everyone understand that? And then also for a trend line perspective, okay, here's a trend line. There's orders all below this trend line, okay? Right? There's orders, always pending orders. There's always stop losses underneath all these highs and lows. Does everyone clear on what I mean by that and why liquidity is important? Clear? Yes. Okay. Perfect. All right. So now we understand that the market moves towards to take out liquidity to fill orders, okay? The other reason the market moves is to do with imbalance in the market. And that's an imbalance between buyers and sellers, right? The market is either seeking liquidity or imbalance. That's it. It only moves in those 2 ways. It's either seeking to take out buy side or sell side liquidity, or it's going to fill imbalance, okay? Why is the liquidity above or below in other cases? So, okay, let's say, right, you're in a trade, okay? I'm going to target this specifically at you, okay? You're in a trade and you enter this trade. Where do you put your stop loss when you're in a trade? Let's say I was entering this short here. Where am I naturally, from a psychological point of view, and also just from a logic point of view, going to put my stop loss if I'm entering a short here? I'm going to put it above this high, because that's what just makes sense, right? Think about it from a psychological point of view. Your first instinct is to go put that stop loss there, and it's everything that you've ever been told to do is to pivot above the swing high, because of market structure. Market makes highs, lows, so I'll just put it above the swing high, right? So that's the reason that there's liquidity there, because you have to think how many people are trading, right? And then also institutions as well. So that is why there's liquidity there. And when price takes out liquidity, the ICT sort of concepts would say that price would then take the liquidity and go the other way. Okay. So that's why there's liquidity there. Now, imbalance, as I say, is an imbalance in the market. So an indifference between buyers and sellers. That means there's more buyers and sellers in the market, so the market is imbalanced, okay? And we'll come into how you can spot that in a moment. So price, just to recap, is either seeking liquidity or it's seeking imbalance. That's it. Those are the only two reasons the market moves from this perspective, okay? Now, the other thing that you need to know for ICT is market structure. Who here is very familiar with market structure and uses it in their trading already? Okay, so you've got your higher highs, higher lows. That's the type of thing. Okay, now who is also familiar with terms like market structure shift, change of character, break of structure, these types of terms, most commonly used around the internet, and they're thrown about quite a bit. Okay. Now, they all essentially mean the same thing, okay? It's just different sort of things get repackaged and then there's advertised as different ways to entice people in. Now, if I just go back to a chart here, so the market, in a typical way, moves like this, right? You've got your highs, your lows, right? That's an uptrending market. Now, that's what normally is sold a market structure, right? So if we're bullish, that means we're breaking these highs and we're creating higher lows. So higher high here, higher low here, higher high here, higher low. Okay, this is a bullish market. But the second that price decides to break this low, okay, now this is what we call a market structure shift or a change of character or a break of structure. Now the market has essentially shifted gears and now a downtrend will start. Okay. Does that make sense to everyone? So this is what we mean by a market structure shift or a change of character. Basic market structure shift here, market structure context here. Okay. So this is the basics, higher highs, higher lows, higher highs, higher lows. And literally we're taking this literally to the point as when a low here is clearly broken, then it's a shift in gears in the market altogether. Okay, good. Everyone's clear on that. All right. If you're not familiar on market structure, then what I would recommend is just go watch some basic introduction videos to market structure on YouTube, because as I say, we're mostly going to be covering ICT, but for ICT, you do need to understand basic market structure. Okay. Now, someone put change of character is difficult to grasp. I will cover it today, and I will also backtest it with you guys, just so we can go over some examples and you completely understand it by the end of today. So we're saying something like the market is going down, we would see the opposite of this. Not necessarily. ICT stands for inner circle trading. It's a bit cliche. Okay. So this is how a normal diagram of the market is portrayed, right? But how the market actually looks is something a bit like this on the right. So this is how it's sold to you on the internet. Perfect higher highs, perfect higher lows, perfect higher highs, perfect lower lows. However, it actually looks like the diagram on the right, where it's a bit messier than this, okay? So it comes up, comes down, makes this higher high, comes down, actually takes that out, and then continues down. And you can see like this, okay? This is the reality of how the market moves. So this is a perfect example of how the market moves. This is how the market actually moves, as we all sort of would know. Okay, so perfect example, how you're sold online, how it actually moves like this. Okay, and I'm sure many of you will have noticed this as well. Now, that's just something to consider, but what we actually like in an ICT concept is this, okay? So when ICT sort of traders have a bullish bias, okay? They're looking for buys in this uptrending market. What we would actually like to see is to generate the next move up, we would need liquidity to drive us there, okay? So we look at this swing low point, which everyone sees as that's the lower low. Everyone is looking at that and thinking that's the lower low. Okay, this is the lower low. We're going to continue up. That's what everyone is seeing. Okay, from an ICT perspective, what we're actually looking at is this to be a trap. So everyone thinks it's going to go up when in fact it actually comes and takes out this low. Okay, and then everyone here, everyone here then sees this as a change of character, and then they get baited in, and then everyone starts to enter sells here. And then, of course, the market absolutely rips to the upside. Okay, so not only does the market trap in buyers here and then comes back and takes all of them out at this low, it also then traps in sellers here and then takes them all out here as well. Does that make sense to everyone? And that is how the market actually moves. Okay. Okay. Can you say that again? All right. So just one more time. All right. So this is how the market normally works. This here would be a significant lower low. Okay. So we're printing higher highs, higher high, higher high, high low, higher low. Every single person that understands basic market structure, right? That's what trading is built around when you first start out. Market structure is looking at this to be the next move up. Okay. So if I just move this here, let's say the market's here, right? You've got clear uptrend here. You see this low get put in and you think, okay, great. The market's going to move to the upside. So then you buy thinking that the market's going to come up to here. Okay. What actually happens is the market comes down to here. Okay. Now everyone who bought based off market structure has now been stopped out. Now another group of traders, right, have now seen this break here. So they've seen the change of character. They've seen the market structure shift. And now they're all thinking, okay, shit, I need to sell now. The market shifted gears. It's going down. When in actual fact, it just rips to the upside and makes the move for the next higher high. Okay. So all of these sellers that got in here are stopped out. All of these buyers that got in here are stopped out. The market's just completely ruined everyone. It's ruined buyers, sellers, all alike. And then it's made the next move to the upside and continued the bullish trend. Does that make sense? Okay, cool. So moving on, that's market structure. That's how ICT sort of works. And we want to capitalize off these liquidity grabs. So what we would call this is a raid of this low, and this is a liquidity grab. And then we catch this big move to the upside. And now we can do that using various different things, right? I spoke in the last webinar about Power of Three. If you haven't seen the Power of Three webinar, I'd recommend going and watch it. If you're studying ICT at all, it was really good. I thought it was really insightful, and it's a slightly more advanced. So as I say, this would be a beginner sort of webinar, but the Power of Three webinar was slightly more advanced, and it can obviously, help a lot. But how do we validate a market structure shift or a change of character is actually valid? Okay, so when you're actually seeing these moves to the downside, so let's say you're actually looking at this, okay, and you're thinking, okay, that's okay, now we've shifted gears, now we're in sales, right? How do you know it's in sales? Okay, one key way to spot that is what's known as displacement. Okay, so you get your market structure shift, then you need what's called displacement. Displacement is an aggressive, strong move, okay, that leaves imbalance behind. So this here, if I come onto the chart from today, right, this would be the low that we're taking out. If you look at this, high, 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 low, high, 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 low. Instead, the market shifts gears and breaks down, okay? This strong move here, displacement is essentially a strong move that leaves imbalance. Okay, so we broke through this low aggressively and the candle closed aggressively below. That's an indication that we basically change gears. Okay, if the market were to only just slightly tap through, so let's say, for example, we were looking at this here. This is our market structure, higher high, come back in to put in this high low, right? And then, but what it does here, if you look, this is an aggressive, that's not aggressive, all right? Compare this to this. Look at that. That's really aggressive, absolutely smashes through it and closes strong. This is just a little, just about makes it under and then shoots off to the upside. That is how you know whether a change of character or a market structure shift is going to work. It's called displacement. Okay, it's really crucial. You need to be using displacement in your trading. And I can imagine lots of you that are sort of getting stop hunted like this. It's because you're not using displacement. Okay, is everyone clear on what displacement is? Displacement also needs to leave imbalance behind. So what do I mean by imbalance? Imbalance is what we refer to in the ICT world as a fair value gap. Okay, so this big red box here that you can see right here is a fair value gap. Okay, that's a fair value gap, right? You need to create a fair value gap. You need 3 candles. Let me show you the diagram. It's on this slide. Okay, a fair value gaps are created within displacement and defined as instances in which there are inefficiencies or imbalance in the market. These imbalances are visualized on a chart by a 3 candle sequence. Okay, so 1 candle, the next candle, and then the 3rd candle. The way that you can tell this is a fair value gap is these 2 points of this. So this wick here and this wick here, they don't touch. Okay, that's an imbalance in the market. So that makes inefficiencies. An inefficient market, the candles don't touch. In an efficient market, they do touch. So as you can see here, right? If I just use the replay tool here, one sec, it's just got to load. You wait for the reversal, and I will show you how to do that in a moment. Okay, this right now here is an inefficient market. Why? Because this wick here, you see that wick there, all right? And I'll just draw a little arrow to point it out. That wick right there, all right? And this wick right here, they don't touch. There's a gap in between them. So that's imbalance in the market. That's inefficiency because these don't touch. So there is a difference, right, between buyers and sellers, okay? Just to really drill it down for you. I'm trying to obviously explain this as simple as I can for people that have never heard. So I'm sorry if you are already aware what a fair value gap is. Yeah, I'm just trying to explain it as simply as I can. This is also the 1 hour, yes. Okay, so you can look at that. That is what imbalance is, and that's what a fair value gap is. So this gap in between here is inefficiency, right? And the market needs to fill inefficiencies. That's why I say price either trading to liquidity or inefficiencies or fair value gaps, okay? So the market fills the inefficiency, right? This wick fills it, and then it shoots up to the upside, okay? All right, so that's what a fair value gap is. Is everyone clear on what a fair value gap is now? What about when there is displacement that would give you multiple fair value gaps? What FVG would be considered a good one? I will cover that in a moment for you, don't worry. Now, the next sort of thing that we need to... So we've covered market structure. We've covered displacement. Displacement is the #1 things you need to be looking at when looking at market structure, because that is what's going to basically tell you what is a strong trade versus a weak trade, okay? And in displacement is a fair value gap, okay? You can see on this diagram, right, strong close below, displacement here, we come back into the displacement, and then we continue to sell off, all right? It's also important to understand just candlesticks in general. So open, high, low, close. So the open of the candle, the close of the candle, and the high of the candle, and the low of the candle. Now, every single candle must have a wick in, okay? And most candles open like this. So a candle opens here, all right? Most of the time it will put in a low, then it will go up, put in the high, and close like that, okay? That is how every candle sort of works, okay? That is essentially what we would call the power of 3 in ICT. So if you haven't watched the power of 3, I recommend going and watching that, okay? So now we've covered basically just basic candlesticks. That's what a basic candlestick is. A change of character, market structure shift, fair value gap, market structure shifts, and just going into this a bit more. Every single candle moves in a 3-stage process. Every single one. The 1 minute, the 30 second, the 1 second, the 1 hour, the 4 hour, the daily. They all move according to a theory, which is known as the power of three. And what do I mean by the power of three? Okay, that's accumulation, manipulation, and distribution. Okay, so every single candle moves like this. It will accumulate, then it will manipulate. So it will take out, as we spoke about, right? So we'll have this accumulation area. This is a buildup of orders. It will manipulate all of these orders, and then it will sell off to the downside. Then we'll get our displacement here, our strong close, our fair value gap, and then we continue to sell off. Okay, does that make sense? Every single candle works like that. That's what happens in every single candle. If you see a 4-hour candle forming on the lower time frame, you will see, if you really look into it, accumulation, manipulation, and distribution happening over and over and over and over again. Okay, just for example, what do you call all this? This is accumulation. It manipulates all of this and then distributes to the upside. This is a bad example, obviously. I've just drawn this on my chart in 1 second, but I can show you some really good examples later on. And we did do a full session on how you can just use this to trade the markets, okay? So that's another thing you need to understand for ICT, the power of three. And here's an example of this, and then also using that in a candle. So you've got the accumulation, which is the open of the candle here. Manipulation is the low of every candle, and distribution it then puts in the high of every candle. Now, this is really useful for when using sort of the daily time frame, okay? So for example, the daily time frame, right? When today ends, all right? So if I just fast forward to current price, when today ends, right? Let's say tomorrow we are, get off my screen. We are bullish. What's likely going to happen tomorrow if we were bullish the candle would open here, then we would put in a low, then we would move up, put in the high, and then close. Okay, really important to know that on the daily time frame, especially so that you can decide your bias for the day. Okay, now especially you can, but the better you get at using this concept, the lower time frame you can go with it. Okay, so a good starting point would be the higher time frames: weekly, daily, 4-hour. Okay, and then use the 1 hour. All you need to think in trading is that all I need to do is predict the next higher time frame candle to make money. So if you're just trading the 1 hour candle, the 1 hour chart, all you have to do is predict the next 1 hour candle to be bullish or bearish, and you made money. It is really that simple when you boil it down at the end of the day. Okay, so that's just a brief introduction of the power of three. If you want to learn really in depth about the power of three, go check out the last webinar, and I go really in depth into that. Okay, so we've got fair value gaps. The next thing you need to know about ICT is order blocks. Okay, what are order blocks? Okay, order blocks are areas where institutions leave their limit orders, or there's a lot of orders essentially built up, which is going to shift price lower. Now, there's various ways to identify good order blocks and bad order blocks. Order blocks are essentially supply and demand. They are very, 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 very similar. Here you can see some examples of order blocks, and just to make it as easy as possible for you guys to spot an order block on a chart. An order block is the last up close. So for example, in a bullish move, it's the last down close candle before a bullish move up. So if I were to show you this here, this strong move up here, the last bearish candle before that move was this. So that's an order block. Okay. If I just go on EU or GU, I'm sure there's some better examples from today. All right, this strong move down here. See this big red candle, this last bullish candle before, that's an order block. Why is that an order block? Okay, this was the candle that all of these sellers entered the market on, right? And that caused this aggressive move to the downside. So this is where orders are resting, inside this candle. And that's why it's an order block, okay? Here as well, that's not, see, this is how you can identify good order blocks versus bad order blocks. This order block here isn't necessarily a good order block. Why? Because it wasn't really that aggressive and it didn't really break any lows or cause any displacement. So bad order block, good order block. So the odds are with Euro USD, if you're looking at it this week, this is a good order block. So price is likely to come back, accumulate like this, when I said with like the trend line liquidity, right? And do something like that. Okay. So this would be all this accumulation here. Then you would tap into the order block and then sell off, right? Is everyone clear on what an order block is? The last down close candle in a bullish move, or the last up close candle in a bearish move? Sorry, the words get jumbled in my mouth. We've got some questions here. It's recorded, also known as the Judas swing. Yes, the Paris 3 is also known as the Judas swing. Typically a reversal back into a fair value gap or order block for entry, unless you're brave to enter straight off the displacement with a wide stop loss. Yes. How do we enter the order block? I'm going to show you various ways to enter an order block. But essentially, order blocks with ICT, you always start on the higher time frame, right? You get your higher time frame narrative. So I'm on the 4 hour right now. Okay, what is my higher time frame narrative? All right, so if I was looking at this Euro USD chart, here is a massive level of imbalance, which price has finally got to. Okay, so all week price has been seeking this level of imbalance. Now we've finally tapped into there. Looking at this, where's liquidity? Where's orders resting? Well, we've got this big sort of trend line here, right? Lots of orders above all these highs, lots of orders there, lots of orders there. So potentially I would look, my bias would be bullish, okay? Essentially, right? Overall on the higher time frame, let's say. Then I would scale into the lower time frame. I would use things like fair value gaps, order blocks to then try get into the market. So let's say if we were to break out of here, right, with displacement, so we displace aggressively above there, then we would look for an order block around here, enter and continue up. However, if we only went like that, right, and we didn't properly displace, remember, displacement is a strong aggressive move, right? There we didn't really displace. That would be considered manipulation, and we'd probably continue to the downside. What's the difference between order blocks and liquidity? How do we enter order blocks? Do you take the wicks into account for an order block? It depends. Some people in the space consider it differently. So some people do just use the body. Other people do just use some people do it directly off the wicks. There is quite a bit of variance. So look, if we come on the GU chart here, we see order block here, right? So today's big sell-off on GU, we tapped into this order block and then we sold off. Here's another order block here. I personally do take into account the wicks. That's just what I've noticed. It does seem to work better. So I personally would say take into account the wicks. But again, you'll have to backtest it. You'll have to find out your preference because the preference does vary in some circumstances. Another thing that makes an order block high probability is if it has inducement beforehand. Okay, so what I mean by inducement is essentially liquidity built up before it. Okay, so this is all liquidity here, but price comes up to here, doesn't quite tap it, okay, and then continues down, right? There's a lot of people that got induced into the market here, right? They entered thinking that the market's going to go down because they saw it as bearish, okay? Then price quickly comes and takes all of them out, taps into the order block where the institution's orders are resting, and then aggressively then moves to the downside. So another thing that you want for a high probability order block is a fair value gap before. Okay, so you want an order block that created a strong displacement move that broke a low. Check. 1, 2, 3. This order block caused a move to displace and close below this low. That's number 1. A fair value gap before the order block. Nice fair value gap. There's imbalance in the market here. Then some form of liquidity before the order block. So a high here that was put in as inducement. 1, 2, 3. That is an extremely high probability order block. Okay. Is everyone clear on order blocks and using that concept in trading? As I say, we will be doing a backtesting session together where I will use all of these concepts and you will see them all used in action. All right, cool. So that's order blocks. So we've covered fair value gaps, we've covered market structure, we've covered liquidity, and we've covered order blocks. Okay. Here's a little thing to show you what obviously makes good order blocks and bad order blocks. So if an order block takes out a low, it's a good order block. If it doesn't take out a low, it's not a good order block. And it always, as I say, to be a high probability order block, needs a fair value gap before. So as you can see here, this has the gap. This one doesn't have a gap, low probability, okay? Okay, now these are all of our entry models of how we actually get into trades, okay? So these are all in the Discord, these are all templates, but these are all based off the concepts that we just spoke about, okay? So as you can see, we've got a liquidity sweep into higher time frame area. When we say, so in ICT, it's called a PD array. A PD array is essentially a higher time frame fair value gap or order block, okay? It's that simple, really. They just like to overcomplicate it, that's all, instead of saying an area of interest. But as you can see, right, all these different ways. So what essentially you want to do is you want to wait for a higher time frame area, so a higher time frame order block or fair value gap, and then you want to go onto the lower time frame, look for some sort of liquidity sweep, wait for a change of character or market structure shift, wait for the pullback into a fair value gap, and then enter, okay? So if you're not sure, these are lower time frame entry models, okay? And it's got all the steps on what you need to check off before you enter into each one of them. So these are your possible entry models. The other one that is more popular at the moment, as I said last time, is the inverse fair value gap method, which is a lot more popular, but a lot harder to use. So this one I'm going to throw into the backtesting session and show you guys how to use it. I'll show you guys how to use it. It's a lot harder to master, and it's also a lot, if you're not familiar with how to do it properly, can also cause you to take a lot more losses consecutively. Okay, and the very last thing that we're going to cover is SMT divergence. Okay, who knows what an SMT divergence is? Anyone know what SMT is? So that means always enter in fair value and order block area rather than focus. Yeah, it'll be high. If you have an order block that crosses with a fair value gap, then it's a higher probability area, yes. Okay, so it doesn't seem like many people know what SMT is. Now, SMT, in my opinion, is literally like, when I say SMT is strong, like SMT takes a trade that's like a 60% chance from coming through to like a 90% chance to coming through, okay? So SMT is when you have two correlating assets. So for example, Euro USD, GBP USD, or NQ and ES, right? And they correlate perfectly. But one of them, for example, takes out a low and the other one doesn't. So there's a difference between them, and it's almost like a crack in the market, okay? So just to explain that to you even today, if I just go to NQ, there was a good example of this today. So NQ on the left here and ES on the right here, okay? Right. So if I mark out this high here on NQ, right? That same high, so if I come here and mark it out on ES, okay? So the timestamp on this was 2:45. Timestamp on this high, this needs to be on the 50-minute, is also 2:45. So that is the same high as that, okay? But NQ takes out that high. ES doesn't. That's SMT, okay? So NQ takes out the high, ES doesn't. There's a crack in the correlation, okay? They're no longer correlated. There's a crack in the market in that. Does that make sense? And it only works in correlated assets. And what happened the second that the SMT formed? Yeah, that's divergence. It's called SMT divergence, okay? So the second that we saw that higher time SMT, the market sold off super aggressive today, all right? And you can use SMT on the higher time frame, lower time frame. Let me show you something even more crazy, right? I took this exact trade today, okay? So what's this here, guys? What have we just said that this is? What have we just said that that candle right there is? An order block, yes, okay. What does this order block, what did this order block do? it took out this low. Okay. It created the low and it took it out. All right. That's checklist number 1. What does this order block have before it here? What's this? What have we just gone over? All right. A fair value gap, imbalance. Yeah. Okay. So it changed, made a change of character. It made a market structure shift. All right. It has imbalance before it. Okay. And there's our order block. Okay. What did it also do? See these highs here, right? There's liquidity resting above these highs. Okay. There's orders above this high, orders above this high. So we've got, this is a great setup. And then what happens, right? Price taps into this order block. Yeah. And then going even further, it also then made SMT, right? So if we look at this high here, right? And then I also look at ES over here, this same candle, the high got taken out. So NQ made a lower low, ES made a higher high after tapping into this order block. And look what happened to the market today. Is that a coincidence? All right. So that is what in ICT we would call an A+ setup. We've just used all of those concepts to put that trade together. And then obviously we got the massive move today. And I took this trade today, right? So obviously, as I say, we're going to go into a backtesting session now, as long as everyone's clear on all those concepts, right? So those are the things that we need to understand. We need to understand order block, a fair value gap, market structure, displacement, and SMT. Does everyone understand those 5 things? Yes, it's recorded. Yeah, you don't have to use SMT, right? SMT is, as I say, I'm throwing this one in here for the people that already are familiar for ICT, and it's a slightly more advanced concept, okay? But in my opinion, it is one of the most powerful concepts. Because these trades, these setups, these order blocks, these fair value gaps, they're going to set up all the time, okay? But what makes them high probability is SMT, okay? It's just an extra confluence to add on, okay? So let's say you've got a probability of 70% of that trade coming through. If I see SMT, I know that's A+, I'm going to size in more on that position. Say you find SMT, how do you find which asset is going to follow which one? So if you're bearish, right? If I'm bearish, okay, and I'm looking for the market to sell off, NQ here made a lower low, whereas ES made a higher high, right? So ES is slightly more, it's stronger because it's trying to make a move higher, whereas NQ failed to make the move higher. So NQ is the more bearish asset. So I want to trade NQ because I'm bearish. Does that make sense? Yes, that's exactly what SMT is literally the markets. It's a crack in the market, right? It's a slight crack that basically is saying to you, right? If you know how to spot it and you know how to look for it, it's basically saying, I'm about to move. I'm about to make a massive move right now. I'll show you even further, okay? Right? Just for example, before the massive move happened, right? And we sold off aggressively today, you could even go onto the 1 minute time frame. So there was that. Where are we? There was an SMT on the 1 minute earlier today. Oh, okay, it came back up. So here, look, on the 1 minute, right? This high here, higher high, yes, lower low on the 1 minute. And then it's literally straight after it made the SMT, sold off. We build direction with context. Yes. So you use everything else that I've just spoke about. So you use everything else to find your higher time frame daily bias. Okay. So when I say daily bias, I mean go onto the higher time frame. What am I? Am I bullish or bearish? Right. The reason I was bearish today looking at this trade. So if I just come back onto here, right? We took out this buy side liquidity. This big wick here on the 4 hour, Lots and lots and lots of orders above there. So we took that out. That was the first thing. Then we tapped into a fair value gap. Now, ideally, we'd like to tap into an order block, but it doesn't always happen, okay? Then, moving on from that, we got the SMT, okay? We had a change in market structure on the 15-minute time frame. And then we took out this liquidity. Then we formed this order block. Okay, so it's just slowly building things up to eventually you get it. As I say, it's not the easiest thing to master ICT concepts, right? It takes a lot of screen time. It takes a lot of backtesting to sort of just get it so you can look at a chart and be like, that's that. It's not the easiest thing. It does take work. It's not going to be like an EMA cross, okay? It is reading price action in a completely different way to what you normally would, but it really works, in my opinion. But if you were bullish, would you trade ES then, since it was stronger? So if you were bullish, you'd be looking for the opposite. So essentially, yeah. If I was bullish, I would have traded ES instead, but I wasn't. You need higher time frame context to go with it. That's, yeah, okay. Yeah, that is the issue, right? ICT can be there is a lot of information that goes into it, so it does take a lot of study, right? I'm trying to get you. The issue is this webinar might seem a bit jumpy and it might seem a bit but I'm trying to get everything across to you so that you have the basics, because you need to understand those 5 different things. So you need to go and practice them. You need to practice identifying order blocks, okay? So for example, if I just go and mark out all the order blocks on this chart, right? Order block here. Last down close candle before a strong move up. Order block. 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 Okay. Do we see how to identify an order block, right? I've identified all the order blocks on this chart. All right. Do you see that? The last down close candle before a strong move up. I hope that clears that up. All right. You can make money with just order blocks alone. All right. You can literally just make money trading order blocks, right? You could literally just enter using the 3 things that we spoke about today on how to identify a high probability order block. The order block makes a change, right? In market structure, it leaves a fair value gap. You could just enter as price taps the order block here, stop loss above the order block, and that's it. It's that easy, right? You could do that, and you will make money doing that if you're consistent enough and your higher time frame bias is right, okay? That's kind of where people start off with ICT. They mostly start off trading order blocks, just simply like that. They don't use the entry models, but then you can build and build and build and build. So you can start on the 4-hour time frame, get comfortable with that, move on to the 1 hour, and you can go all the way down to the 15-second time frame, and you can trade like so accurate. Do you enter on the 15-minute time frame? You can. You can, as I say, you can go all the way down to the seconds time frame. You can just keep using these concepts to refine and refine and refine your entry until you're happy. Okay, so this was obviously the higher time frame setup. If I go onto the 1 minute, right, I can just refine and refine and refine. So when I'm looking on the 1 minute, what do I see? Okay, so I've got liquidity here. This here is the order block. See it? See it right there? Order block that broke this low. That's the order block that caused this move. Order block caused this strong move. Okay? Then this is displacement, which closed below this low aggressively. There's our order block. There's our liquidity. There's our close below. Right? Then we can obviously enter off that order block. That's scaling into the 1 minute, right? You don't really want to be doing it on the 1 minute, okay? Especially if you're new, it's very hard. But look, see, order block, okay? Price broke, took out this low, fair value gap before, order block, okay? Sold off from that order block exactly. All right. As I say, you can keep refining it, but again, it just requires a lot of practice. I appreciate that you feel like there's an overwhelm of information, and if it's a new concept, there will be. As I say, right, there's a ton of videos, right? If you're completely new to ICT and you're really looking to drill in depth to each one of these concepts, I would recommend watching, I think it's TT Trades. He goes really in depth into the concepts and explains them really simply. And just watch a video on each one of these things. No, write them down if you're looking. Watch a video on order blocks, fair value gaps, market structure, SMT, and displacement. Those are the 5 topics you need to cover. So how do you incorporate SMT with supply and demand? Like you wait for NQ to enter supply and reject it, and then wait for ES to enter. Yeah, pretty much. What was the biggest breakthrough for you on your trading journey? It was SMT. SMT changed my trading. So I understood ICT, and then when I understood SMT, I went from like a 55% win rate, 60% win rate, and then I started incorporating SMT into all my trades, and it went up to like 85, sometimes like some months 90% win rate, which to me is insane. Okay, so everyone's clear on these basic concepts right now. Everyone has a brief understanding, because we're going to go and you can use every time frame for SMT. The higher the time frame the SMT, the stronger the move that will be. How often does SMT happen? Every single day. SMT happens every single day, multiple times a day, depending on your time frame. All right. So what we're going to do is we're going to go into create a backtesting session, and we'll show you some of these concepts in action. So yeah. So what do we want to trade, guys? Give me a pair or a ticker that you want to see me trade, and we will do that. Yes. What other votes? NQ, NQ. Tesla, ES, NQ. Mate, you guys are all just ES and NQ fanboys. Like straight up. Okay. I don't personally trade ES. I use ES as a complement for NQ. So I will have to do NQ. Let's do futures, NQ. ES. Oh, it's MES and this, isn't it? Account balance, we'll just do 100,000. What month should we do? Why do you trade NQ over ES? NQ's quicker. It makes the move faster. ES often lags behind. So I prefer to trade NQ just because I'm in and out, I'm quicker. And yeah, ES is just slower. I don't like it personally. Yeah, okay, cool. All right, so ES and NQ we're not going to do this month because I know the price action, so that would be cheating. We'll do 2024. We're not going to do December. We'll do November, start of November 2024 to the end of November 2024. I don't think we're going to get through a whole month, to be honest. We haven't got that much time. All right, cool. So let's zoom in a little bit here. I'm just going to change my chart colors because I don't like these ones. I'm a green and black fanboy, I will admit, guys. But yeah, I'm going to show you some of the concepts in a bit more depth here as we backtest them. So hopefully if you guys don't understand currently, you'll understand a little bit more. And we'll do all these trades together. Okay, so this is obviously midnight. So what we want to do is get into... Oh, that's another point actually, guys. Make it really easy for you. For those of you that aren't sure how to spot a fair value gap, right? Or an order block, right? To help you get used to it, there's so many indicators, all right? So for example, I've got an indicator on here that's called fair value gap imbalance zones. You see all of these red boxes that are automatically marked out? the indicator is doing that. I'm not marking them out. Or if you're not sure what an order block is, search order block on TradingView. Let's see if this is a good one. My TradingView is actually bugged out because I only have 3 indicators here and it's telling me that I have 5. Order block. So if I search order block, now you can see it's marking out those order blocks. That one's a bit rubbish, to be honest. SMC. Yeah, let's do this. Smart money concepts. Looks algo. That's a good one. Right. And what it's doing is it's drawing on for me all the changes of characters, the breaks of structures. And if I just edit this, do they have order blocks on here? Internal order block. Equal highs, lows. Why is it not showing me the order blocks then? Ah, yeah. See, look, it's drawing out the order blocks for me. Can you see that? So they're red boxes again, but it is drawing out. Honestly, this indicator's a bit rubbish. But you can see here, it's drawing out the order blocks. So if you're unsure where to start with those concepts, you can always just add an indicator. Right, and on TradeZeller, we also have the fair value gap indicator. So if I just search fair value gap, now you can see all my fair value gaps are automatically drawn on the chart for me. Make sure you always put hide invalidated gaps on though, because otherwise it shows too many. Okay, see? Now they're automatically marked out. Right, so as I said, this is the first day, it's midnight. What's my daily bias, okay? So we took out this low, right? But below this low is an order block here. And we tapped into that order block. So I'd probably look for buys overall. However, what do we have here, guys? What's this? Look at this liquidity here. We spoke about liquidity, bunch of trendline liquidity here. Okay, so ideally, I want to see this trendline liquidity taken out before we make a move up. So I would probably look for something like this to happen. All right. So let's go to New York session and see what happens. So we're in New York session. 1 second. I just need to make sure this is recording. Can it see my screen? Yes, it can. Okay, cool. All right, so we're in New York session here. As I said, I want to see this down here taken, and then we go there probably. So we have got an order block there on the 1 hour and a fair value gap there. Going on to the lower time frame, we have taken out this high. Okay, so orders were grabbed there. I mean, it could just sell off from there, to be sure. Currently, we're uptrend though. Okay, market structure. We're in an uptrending market, so we're bullish until proven otherwise. So what I would want to see is a close below this low with displacement, remember, for me to even consider entering sales. So let's just sync time frame here. Okay, so we do not yet. Okay, there we go. Close below the low and displacement. All right, so what now? This might even be a great example if it works. What's this, guys? Order block. What did it do? It took out this low. What does it have before it? A fair value gap. Okay. So, as I said, you could just enter straight off it like that. And we could just target this low here. Yeah, this is all right. This would be an A+ order block. I would take this, or I would consider taking this. What's going on here? Why is it not inputting those? There we go. Profit target, stop loss. Okay, so put a limit there. Let's see if we get pullback. Okay, we instantly get pulled back. I'm not as big a fan as that. No. Let's see what happens. Sells off a little bit. Yeah, it looks good. Okay, 1 for 1. I bet as well there's SMT there if we pull up on MES. But do you guys see that that was the exact same setup that I showed you that happened on NQ today? Let's see. Was there SMT there? Yeah, there was. SMT. And SMT on ES right before the sell-off. See that? And there was the sell-off. Okay. Simple, keeping it simple. Order block, change. So market structure shift here. I'll mark it all up for you. Market structure shift. Order block. SMT. When you see that live, would you hold that longer? So if I was taking this live, what I would probably do is at this low here, I'd take partials off there, and then I would probably just hold to this low, or possibly longer, leave a partial. Okay, so that's the first trade. Let's see. So now, as I said, I was looking for sells there, right? And what caused that move? Okay, what caused that move to happen? We took out this high, we tapped into this fair value gap here, we made a change of character. The change of character was caused by this order block. We tapped back into the order block and then we sold off. All right, so let's see if we can look for someone else. So potentially it could run all these lows, not always. Okay, so it aggressively rejects there. So let's clear up our chart and look for the next one. So now we want to be looking for longs, minimum to this order block. All right, this high is looking like some good liquidity, and we've got this liquidity up here to take out. This order block up here would be a great target for longs. So if I was going to go long, I would look for those targets over there. It's a bit late in the day. Let's jump to tomorrow. Okay, so we're on tomorrow. So we took our first trade for that one day. Now we're on tomorrow. Let's see. We've got, is there any SMT on the higher time frame? That, okay. So that low got taken, that low got taken. Okay, interesting. All right, so there is SMT because this was the swing low on ES. This is the swing low on NQ, right? See it here? That's the swing low. ES took all that out. NQ didn't. Okay. So there's SMT. So that gives me a bullish bias. Okay. So I'm looking for buys into the day. So now I need to think on the lower time frame. What have we got? So we tapped into this order block and now we're moving to the upside. So there's no entry for us there. Do we make a strong close above this high? No, we don't. Okay. So 9 times out of 10, we didn't displace above this high. So that's likely a fake move. So we're going to come down most likely. So where's the next liquidity? So we made that fake move. We didn't displace above that high. This is almost definitely going to be a fake move. So next point of area on liquidity on the lower time frame to look for is there. Our order blocks to look for entries. That would be a good order block right there. However, this order block here caused the break. So this would be our optimal order block because that's what changed this market structure. See that? This order block changed, tapped in, moved up. Let's see what happens. I could be wrong here. I would want to see this low get taken and then we make a move to the upside. Okay, that low gets taken. So, I mean, this looks good to go, to be fair. Looking on the 5 minute, it looks pretty Pretty aggressively bullish. I don't think we'd get an entry here though. No. See if I look on the 1 minute. There's no SMT. No SMT there. I mean, you could have taken an entry there. It wouldn't be A+. So I personally wouldn't take an entry there. But if you were confident in your bias. Okay, let's see. So we missed out on that trade. That's unfortunate, but it didn't match. It wasn't A+ in my eyes. So our draw is this high in this order block. Okay, so that's a clear indication that we're bullish. Okay, with massive bullish candle, we're displacing to the upside. Okay, so there's going to be a fair value gap that gets created here. We've already seen it. That's annoying. Okay, well, essentially, I want to see this low, this candle get taken, and then we go up. Okay, we do. Looking at this, is there SMT? Where's that candle? That candle takes like that. So yeah, this could have been an entry. This would have been a good entry long using the inverse fair value gap method. So we take out this low here, and you could have got long off that. We didn't massively cover this though, to be fair. So I'm not gonna necessarily class it, but essentially, yeah, I think this goes long up to our order block. That's your entry. I mean, we know it goes up already. We'll enter a buy here though. But this would be a good entry. I'd put my stop loss probably about here. All right, we've got this trend line liquidity here. That's a good area to target as a first TP. And then that final draw up there. So it goes in. So you take 50% off there. Right. I always like to say as well, when using this and you're looking at the lower time frame, for example, I always like to say, if you missed an entry, where's your slingshot? Right. So a lot of stop losses would have been put below this low. Okay. So price takes that out and then continues to move up. Right. And I would call that a slingshot. It's what I like to refer it as to. Do we get TP? Okay, we get TP on that. So yeah, I'm not sure. I don't know. Are you guys finding me trying to backtest this useful? I'm not sure how necessarily useful it is for you, because obviously I know it a lot better. Okay, all right, okay, cool. If you guys say so. Yeah, so what I'm going to do is just look back. Yeah, okay. All right, let's go into the next day. So it's 5 o'clock there, so we wouldn't be taking any more trades now. Okay, so the bullish move continued massively. All right. On the higher time frame, where are we? We've got this order block here. However, there's no. Was there a higher time frame SMT at those lows? Is my question. Yes, there was. Okay. Look what as well, guys. Look at this. All right. This ginormous move to the upside. All right. What happened at the very bottom on the 4-hour time frame before that happened? There was an SMT. How interesting, eh? How interesting. So yeah, because of that 4-hour SMT at the bottom, this order block here doesn't really fit with my bias, to be honest. I would look for those highs to get taken out. And we're near, is this all-time highs? What price section are we on? Yeah, this is all-time highs. Oh, it's always horrible trading all-time highs. Okay, so this would be a draw on liquidity up here. There's going to be so many stop losses at all-time highs. So that's my overall draw. Let's go back onto the lower time frame for this. Let's go onto the 15-minute and let's see. I mean, what have we got here? We've got a 4-hour fair value gap. So we can look to take a long off there if we get one of our entry models to take out this high. That's my idea for the day. So let's see. Okay, looking on the 15-minute to refine it down. We've got our order block. What did this order block do? That's our order block there. Okay, this order block is the order block that took out these highs and made the change of character. So there's our market structure shift. There's our order block. It's got a fair value gap before it. See a price. Okay, so price retraced into there. Now we would look for longs. So go onto the 1 minute. Again, you could have just entered there. Do we get an SMT? Is the question. No. I mean, you could have like a 30-second SMT, like a 15-second SMT. Right there and there. So technically, yes, you do get an SMT, but it's not very high probability. I mean, technically that is an SMT, right? No, it's not really. I'm pulling at strings. But yeah, we do reject off this quite nicely, which is annoying. Yeah, so again, no SMT, so I probably wouldn't have taken that. But if you were just doing the order block method, as we spoke about, you'd be in this right now. I'll target in up there. But as I say, how I trade personally, I'm extremely picky with my setups. I want to see every single confluence possible. Just because I like to have a high win rate. And if I don't like it. You might get a little intra trade here. I mean, that's not like the worst in the world I've ever seen. You could have taken a long there. Just refined it on the 1 minute, but that's interesting. Could have taken that there. So looking at this on the 1 minute, okay, I'm just trying to refine it for you to show you some more examples. This order block here is what took out this high, right, and made a change of character. So market structure shift, just showing you guys how you can refine this. All right, here's our liquidity beforehand. Taps into the order block, so you could potentially look for a long here. Looking at this, that's the, yeah, no SMT, but you could take a trade here. It'd be a riskier one at that. So you could wait for this inverse here. Once that gets inverse, take a trade there. Should we take a punt? Let's take a punt. I'd put my stop loss below the liquidity sweep, just target this high. See, the thing is, something else you need to consider is that if you're taking trades on the 1 minute time frame, target 1 minute highs. Okay. If you're taking trades on the 15-minute time frame, target 15-minute highs. So I'm not going to go ahead and take this on the 1 minute time frame and then target my TP all the way up here. Yes, I could, but most of the time I'm going to get stopped out. So, and it's probably not going to work. Do you get tagged in on that? Do we get stopped out? No. Okay. There we go. That was pretty easy. So that's TP on that one. And again, guys, I'm just repeating the same thing that I've shown you since the start, but on a lower time frame this time. So I've got my bias is bullish. I've got my order block that created a market structure shift. It left me some liquidity. It's got a fair value gap before it, taps in, and then it makes the move up. It's the same thing over and over and over. Let's see. What time? Where's the market open? Market opens 2:30. Looking for an SMT here. Is this an SMT? This is SMT. Can we inverse that gap? No, we can't. Is the market making an SMT? SMT. Yeah, you could take a long here. That low is there. That low is... Yeah, time is really important. I mean, really... Oh, okay, this is good. This is good. Finally, we've got some movement. So we finally got some displacement here. All right, we broke above this high. Look how bullish this candle is. And we left this fair value gap behind. When you see a really bullish candle and it just leaves a fair value gap, I wouldn't wait for a retrace into an order block. I would just take the entry off the fair value gap because most of the time it's just going to absolutely rip. I'd put my stop loss below there. And now I would look to target the all-time highs. Now that the market is showing me clear intention. And when I say intention, look how bullish this candle is. That is clear intention and a change above a market, like a market structure here. That's clear intention that the market wants to go higher. So I would enter this long now. Do we have an SMT as well? Look at that. Look at that. Look at that, guys. SMT right here. This low here got taken out. The same low on ES didn't get taken out. So to me now, this is an A+ setup. So I would target all the way up there. And let's see. And notice how that absolutely rips. The second we get the SMT and we get that clear shift with the displacement, just goes. Yeah, so we got a draw on liquidity there. It's 2:30 today, so we'd probably just leave that there. We go to the next day, I think. Here after we got that strong move up, because we'd end up chasing longs all day and it probably will continue up, but we probably wouldn't get an entry. So the next day, what have we got? Okay, so we're very, very close to our all-time highs. All right, there's our all-time highs. That's our draw on liquidity. There's no way price gets that close to all-time highs and doesn't take it out. There's just no way. We've got a 4-hour order block here. Granted, it's got no fair value gap before, but it is a 4-hour order block nonetheless. So I am looking for buys. We've got this trend line liquidity that needs taken out. Let's pull up ES. Do we have any SMT? SMT. Somebody come rescue me. We've got an SMT there. SMT. Do we all see that? Lovely stuff. We've got an inverse fair value gap here. We've closed above it. Oh, mate, I'd take this long right now. I'd probably put my stops there. My target's there. Straight away, log on, place a trade. Let's do it. I mean, the draw's good. And we hit TP again. Now we're at all-time highs. So, I mean, it's anyone's guess what happens at all-time highs, to be honest. I personally hate trading all-time highs with an absolute passion. I find it so hard. Yeah. I mean, it's just riffing. Yeah, I'd wait till tomorrow. I wouldn't even touch this. All-time highs are so dead. Okay. So, right. So we're at all-time highs here. We had this big displacement to the downside and we took out this low. Okay. So that's kind of indicating bearish, but the issue with all-time highs is just like, The issue is it's just hard to read. 4-hour candles bearish. I mean, we've got an order block here. I don't expect it to pull all the way back to there though. Premium and discount levels. So we want it to retrace at least 50%. So let's see if we get that retrace. Yeah, okay, we get a retrace. We get a rejection off the 50% area there as well. And there is a very small supply zone there. Or order block, sorry. It's kind of like a hidden one. These, like, this is kind of a tip here for those of you that are even still here and following. You'll often see like bottoms of candles like this, all right? And all there'll be is a wick. Yeah, let's see, how is that an OB, right? This, yeah. It's just something I've noticed. It's like it's not. You can't see it, but it is. And that's like we're going really advanced now, and you'll never ever need to know this, but yeah, you would have to study a lot for that one. I'm not even going to go into it because that's something that's not even online. That's just something I've noticed on my own back. Right, okay. So coming back to this, we are looking for sales. We're at 50%. We did get an SMT. We probably missed the move here, to be honest. Here's our SMT look. NQ took out that high. ES did not. See it? Same high. ES did take it out. NQ did. So yeah, probably missed the move. Yeah, so I would have got in here. So I would have seen this. All right, I've got my SMT at my highs. Market structure shift here. And then you would have had like your 2022 model, your ICT 2022. You would have entered off the fair value gap here. So just to show you guys for reference, and I'd have targeted down here. I wouldn't have liked this trade though at all-time highs, to be honest, but if I just show you back to the PowerPoint, this is this, okay? This ICT Model 1, high time frame market structure shift fair value gap, high time frame area, liquidity sweep, market structure shift, retrace into a fair value gap, and then sell off. If I go back to the back testing, this is exactly that, okay? See the correlation? I hope you do. But yeah, I would sell there. So let's see if the 2022 model plays out. 2022 model, oh, that's the wrong entry. Hold on, near limit. 2022 model is a little bit outdated though, can't lie. Does work though. So that tags us in. Again, just trading all-time highs. Like this is just shaky. Right, I would go break even right here because we're at all-time highs. And also because we're at all-time highs, I'm going to take a partial here. 50% gone. I'd leave the rest. See, now you'll notice as well what we didn't do here and how I know this is now going to reverse is you see this low. What we didn't do is close below this low with displacement. As I keep saying, displacement, okay? So that's how I know that this is a fake, right? Because price couldn't close below. It had no displacement. It just took the low and then started to move back to the upside. So yeah, probably going to go long and I'm going to get stopped. Yeah, I just got stopped. And then it absolutely ripped. And then also, like, I just wouldn't trade this again until I saw clear structure again, to be honest. And this is Friday, 5 o'clock. So time's it? 9:22, hour and 22 session. How are we finding that, guys? I know that was a lot to take in. Did everyone learn something? Good, good, good. Yeah. Nah, it's like 9:30 p.m. here. PowerPoint with the models. PowerPoint with the models. PowerPoint with the models. I'll put it in this chat now. Here you go. What other questions have we got? Yeah, someone said epic results for SMT. Yeah, SMT. SMT is really like, if you guys are already trading ICT and you're not using SMT, I promise you're missing a trick. Like, I thought for so long, like, oh yeah, it's fine. Like I thought, oh yeah, I've got it. But like, you incorporate SMT and all of a sudden your win rate just goes insane. I think there's another example today for those of you that trade Forex. Holy shit, what happened to pound and euro on the open? Mate, look at this sell-off. They are selling off. Yeah, if you look at this on, so before the big sell-off on pound and euro, there was also an SMT. You see it here. GU made a lower low, whereas EU made a higher high. But yeah. Yes, it was recorded. It's going to be a lengthy recording. It'll probably take me a few hours to upload it to YouTube. I'm starting to structure more of my stuff around ICT. I'm not even that good at it yet, but I'm already feeling the improvement. Yeah, ICT is like, it's like, it's just a different way of looking at the markets altogether. So normally, like, I get like the basic sort of view that everyone starts off of is support and resistance, right? And trend lines, that sort of stuff. But it's just an entirely different outlook. So when you start to learn these concepts, you see the market in a completely different way, and you see it based on liquidity, right? Liquidity being the driver. So you like, a strong move can't happen unless a high is taken out. So like, for example, this sell-off here only works because this high was taken out. Like, basic market structure would tell you, oh, seller selling off, there's the pullback. Oh shit, wrong tool. There's the pullback, and now we continue lower. But no, it actually needs fuel to go lower and make that actual move to break this level. So it then has to take out this high and then make the move, because there's not enough fuel to send the market lower, if that makes sense. The market needs fuel, and that's what liquidity is. It's fuel to drive the market lower or higher. But yeah, and then obviously order blocks, fair value gaps, all these types of things. Just literally put on a fair value gap indicator, put on an order block indicator, and for 1 week, just watch price. Don't do anything else, just watch price. And all these areas that have automatically been marked for you, you'll look at it and you'll be like, okay, that's weird. Just reacted perfectly off that area. And then you'll start to be sold on how these things work, because you start seeing it so much and it just works out again and again and again and again. And then you're like, well, God, okay, maybe this does work. What's my YouTube? I don't really have many videos. My YouTube is I do need to start uploading more videos to YouTube to help you guys. Here's my YouTube. YouTube's there. The power of free, like the power of free session we did, is here. So like, for example, if you want to learn further about the ICT power of free, which is like how every candle moves, we cover some similar stuff, but here again is another backtesting session using the same concepts, but to trade ICT power of free. And then we go into that. I think on this session, we actually made like 40% in 2 weeks on the backtesting session, risking 1%, which was pretty crazy. These sessions are just posted on my YouTube. These won't be on TradeTeller. So yeah. And then there's some other videos on there. Like, again, I need to post more, but like, here's one. So like, this was an FTMO challenge I did. I passed it, and then I made an 8.5K payout. And it again is just using these exact same concepts, but I like break down all the trades that I took for it. So again, if you're interested in learning further, this might be useful for you. And this is just me talking about all the trades. Again, here's another trade recap video, and here's a supply and demand liquidity strategy. So this is like the order block strategy that I was speaking to you guys about, how it can be very simple when you only use order blocks. This is a great place to start, and it is a working strategy, which when I taught this session, there was probably about 10 people from this Discord that took this supply, demand, and liquidity strategy, and then they started trading it, they back tested it, and they got used to it, and now they actually all trade it on live markets. And I've seen some people from this Discord take this strategy and make like 20k payouts, and that was like 2 months ago. Are there any indicators to spot an SMT? No indicators. There, it says there's indicators, but they don't work. They're not accurate. It's something you need to learn on your own. I've never seen an SMT indicator actually work, but if there is one, then I'll eat my words, I guess. But yeah, again, it's something that takes practice, right? It's not the easiest thing. There's so many different things again that go into ICT, and it's, as I say, it's like learning an entirely new way to view the market. So it's not going to be the easiest thing, but once you get used to it and you start getting more familiar with it, then it will help. Do you think for the sake of learning we should draw them ourselves, or will the indicator be as effective? I think for the sake of learning, it's actually better to get the indicator to mark them out and then remove them, purely because then the indicator is automatically going to draw them out, and then you're just going to, like, your eyes are going to get used to them drawn out, and you're going to spot them easier and quicker. And then once you've finally like just see them at a glance when you look at a chart, then remove the indicator because you don't need it anymore and they become a burden. Yeah, look for them. There will, I can guarantee you tomorrow there will be at least 3 SMTs on the lower time frame. But like literally before every move, without using language, like SMT, it's just always SMT before every single major move. I do not personally take a trade without SMT anymore. They obviously, the thing is with SMT though, they only work on GU, EU, NQ, ES, GJ, EJ. Like you need to have 2 perfectly correlated assets. Like for example, it wouldn't work on gold. So that's not a strategy you can use on gold because it hasn't got a direct correlated asset. Yes, you could say silver, but it's not correlated enough and it doesn't work well enough. But yeah, has anyone got any other questions before I love and leave you all? I hope, again, you all enjoyed the session. Just as a reminder, actually, whilst I've got you guys here, just a little plug. If you guys haven't left a review on Trustpilot, we are about to break we need one review to break 300 reviews. So if you guys could leave, just one of you who hasn't, leave a review on Trustpilot, I would really appreciate it. And I'm just going to link that here, subtle little plug. So yeah, if anyone wants to do that, then feel free. But yeah.